Welcome back. You're still watching Markets at Noon on ET. Now let's turn to the earnings corner as well, where we'll be talking about Hinduja Global's performance in the quarter gone by. Mr. Partha DeSarkar, Global CEO at Hinduja Global Solutions, joins us now. Mr. DeSarkar, thank you so much for talking to us about your Q1 performance. If you look at how much has been the benefit or the impact of Forex, if you could tell us, because revenue has seen a good double-digit growth uptick in CC terms, but on a sequential basis, PAT has seen a 25% degrowth. How much of it is attributable to Forex hit?
Let me get into a little bit of a detail. It's not really foreign exchange that is causing that situation. If you have seen, as you've said, the growth has been very good. At constant currency terms, it's about 15%. EBITDA has actually doubled. What has impacted the PAT is the fact that there is a new accounting standard that has come in, which essentially creates an asset out of our long-term leases in buildings. And that therefore converts rental incomes into depreciation and interest. Now, when you capitalize a 10-year long asset and then you take a depreciation and interest on that, that impacts the lines below the EBITDA and depreciation and interest. And that's why you will find that even though EBITDA has virtually doubled, the PAT line has remained flat. That is India's 116 on lease capitalization. There's a new accounting standard for this year. FX impact is only about 1.7%, so that's nothing. That's got nothing to do with our performance. The profitability performance as such is very good.
Right. On a QoQ basis, there is a good uptick when you look at US, Canada, Europe. Is this coming from the new capacity that the company had invested in earlier?
That is correct. We are actually now, we had built new capacity. The capacity is now almost full. So we're coming to a point where we may have to invest on capacity or lease some new capacity. So yeah, growth, strong demand environment, good capacity utilization, and a few businesses that were not doing well, those have also started to pitch in. So all of that's kind of there.
About the client base as well, you've added 8 new clients, you've expanded engagement with 18 existing ones as well. But based on their budget and the demand commentary, do you expect continued revenue growth in high or mid-teens in the coming quarters as well?
I think the demand environment is stable and the pricing environment is stable. I do believe that we will have teens growth, whether it takes us to the numbers that we've achieved. We've had a good start of the year, let me put it that way. So there is momentum. Whether we are able to sustain this level of growth on coming quarters is something that I won't be able to comment right now. There are a couple of things that I need to play with out there to be able to see whether this can be sustained in Q4 as well. But overall, the pipeline is good, and I'm reasonably confident that we'll have a high growth year this year.
Right. Thank you so much, sir, for taking out time for us. Always good to get perspective of